Get him going.
Oh, the new intro song. This is the upgrade from the Raoul song to now the Travis song. So we found...
It's literally, the artist is Travis.
The artist is Travis.
Not me.
Why does it always rain negativity on Travis? Like, if the market just behaved itself, we wouldn't have this theme song, would we?
I invite the backlash. I do it. I embrace it.
You embrace it. You want as much rain as Capricorn Copper experienced.
I don't want that much rain.
Life.
I don't want that much rain. Poor Capricorn Copper.
Oh, poor Capricorn. As we're going to get into that big news out of 29 medals. JD, you've gone balls deep on copper. Mate, you are the macro commodity man.
Yeah, I'm not sure about that, but we are going to talk about treatment and refining charges. We're also going to talk about a interesting deal going down in Zambia with a few different parties, one Aussie party involved in that, and a bit of prediction making in and around that as well.
Trav, your mates at Strandline?
Yeah, mate. There's a Tanzania twist there, but I couldn't help but get caught up in the details of the financial accounts, mate, because they've been stranded for ages off the ASX board. So keen to talk about that one.
Should be stranded.
No pun intended.
Firefly raising shitload of bucks. Geez, they find ways to get into these episodes, don't they?
That's a way bigger market cap company than I thought. I did not think it was 250 odd million bucks.
Fully funded before, fully funded after. They're all good.
Right, Nova.
Yeah.
Not the nickel mine.
Nah, this is, ticket NVA. What a strange company. Anyway, can talk about that one.
But we're going to go into Centaurus briefly because we've got a fundy chat coming up in the week who has been ridden the Centaurus wave.
Yeah,
just casting our eye over it. Anyway, 29 metals, Capricorn Copper has unfortunately suspended operations on the back of rainfall from January through to mid-March, which is, they have said, put them back to pretty much where they were March last year, which is completely bloody flooded. So
yeah, you
hadn't heard much about, hadn't had any indication that it's gone that they were back at that position, but we do today.
No, the messaging from the company for a while though had been that they haven't been able to release water anywhere near what they wanted to be able to do. So
yeah, it felt to me like they were restrained on the brief call that they had this morning. They really wanted to call out that the restrictions the local government is holding to, the sort of, rates at which they can release the water back, had sort of, been one of the responsible factors behind them, now suffering as a result of all this rain. So the dewatering at Esperanza South, the underground, can't continue. Mining won't restart. And like you said, Matty, operation suspended. There's no timeline on the restart. There had been partial mining, not at obviously that underground, but across the Greenstone and Mammoth deposits. That had started back in August, but that's going to stop, going to ramp down, and unfortunately it does mean a few people at site are going to be let go, which is not what we want to hear.
Nah, so I'll just give, for people that don't know the full backstory, I'll just do it very quickly. So what happened last year, they had shitloads of rain in North Queensland. Because this Esperanza South you talk about is a sub-level cave operation, it means it's caved to the surface, which it's supposed to do, but that creates an opening for water to come in, and that all that water that's gone underground, on the back of it being a sulphide-based ore body, means when the sulphide mixes with water, it creates sulfuric acid. So that water has to be treated before it is then discharged from site. So they are at the stage that obviously the water treatment plant got flooded, but even with their other ways of chucking lime in ponds and everything, they've got nowhere to pump the water to the surface because the surface was flooded, and they can only discharge from the surface out into the creeks after it's treated during the wet season. Yep. So they were limited to that. So now we're at the back end of the wet season. They've got more rain, and they're just absolutely hamstrung by that whole wheel, you would say. Yeah, shocking.
Yeah, it's not great. And there was a few questions around tailing storage facilities and whatnot. The TSF3 is the key one. That's the life of mine one, which they haven't actually yet put the paperwork in. But they are going to continue working on all those sorts of things in the background while what we just sort of described, things, ramp down and whatnot. So,
and wasn't the other thing, JD, with the government, they didn't get they weren't permitted last year. They were trying to, was it dispose of water into another pit or dispose of do in-pit disposal of the tailings?
I think they'd previously been depositing some tailings into the E-pit up until January 2022, and then they have this application that they've been waiting to get approval for, as far as I understand, to recommence depositing tailings into that pit, which they wanted to do sort of in the coming months. But
I remember in one of the, I think it was the quarterlies last year, they were hoping to do it sooner, but it got denied. So anyway, it's bloody, it's just a friggin' shit show by the sounds.
It is. So
Mother Nature bloody stomped a foot on this joint.
Sure did. Why don't we talk about what sort of position that leaves the company in now? Obviously, they're under a bit of financial pressure. There's an interesting line from near the end of the announcement today that, from a balance sheet perspective, the suspension of operations will reduce cash outflows in the nearer term after initial one-off termination and redundancy costs have been met. So they're obviously trying to reassure the market, and I'm not as confident of their position. Obviously, they would say that. They did say on the call, after being questioned about it, that there were no changes to covenant relief that they'd previously been given. That expires still at the end of the year, though. So we'll get into that more later on, because I think that is super, super important into what the company needs to do next. Cash was looking a bit skinny when last reported, and obviously this isn't going to really help. They had 55 million in net debt as at December 31st, and that's...
Yeah, but the net debt number looks okay, but a huge amount of that's drawn debt, and then they've got a cash position offsetting it. But the reality is they've kind of got to keep a bit of a cash buffer in the company on top of what you sort of think they do, because I think one of their debt facilities is this revolving facility that's subject to like frequent repayments, and then you can immediately draw it down. But you can think of that, okay, that's your minimum mandatory kind of cash balance of, I think it's 40 million bucks. So.
Yes, I think that was 40, and then the remainder was in itself drawn over 200 million, and there was 160 in cash. And then obviously you got the fact that cash flows aren't obviously going to be strong in the coming periods. Having looked into Golden Grove recently, I didn't work out that thing would make any free cash flow this year either, and that's supposedly the better asset. So they did say that today's announcement won't impact the insurance claim. They're obviously still working on that from the event when it initially happened in, I think, March of last year. And they're talking up the idea that they'll get further proceeds from that, I think on top of the 20-odd million that they've already received, although the market is pretty sceptical that they're going to get anything substantial from that. So I think the ultimate outcome is a capital raise pretty soon, and I think in a sense that this statement today is a bit of a cleansing statement. There obviously wouldn't have been able to capital raise in the recent past with this news hanging over them. That would have left them in quite a bit of strife. So I think that's where the company ultimately heads towards perhaps in the next couple months.
Now, I suppose you can unfortunately look at it in the lens that all the money they've spent in the last 12 months on trying to restore Capricorn Copper, the majority of it has
been torched.
Been torched because they're back in the exact same spot.
I think you're right there.
So I'd say that's why it's down 30%, because there was thinking that capital was being spent towards a potential restart, leverage off the copper price, but it's all been wiped as of today.
Yeah, it serves two purposes, like you said, JD. One's that potential cleanse, and another one too is just like when you're very public and you shut down kind of operations, people lose their jobs, those sorts of things. It actually also puts pressure on the regulators to maybe act more swiftly to some of the requests that have been put through by this company to hopefully get like a more amenable plan to discharge in the ways that are appropriate for both the company and the environment at the same time. That there's and the point you made there about the balance sheet and the covenant relief that they relieved from their lender group, that covenant relief was agreed to be provided up until the 31st of December this year. Like at some point your lenders, like they can keep providing extended relief or they can want their money back, or they want to restructure the debt. They've kind of been a little bit receptive to doing some of these things already, but I think it's kind of it's just like what do you like how for how long can you keep doing that sort of stuff, right? How long can you keep restructuring your debt? They speak to getting some potential off-take finance in to help with their liquidity and balance sheet, but if you don't have a restart plan saying we're going to be able to restart, it's going to cost this much, and this is when we can resume operations, I'm not sure how you can get that finance in relation to Capricorn Copper, maybe in relation to Golden Grove, I don't know.
But even if you got that, it's a short-term fix, but you'd be giving away a bit, wouldn't you?
Yeah, and
the future upside of copper and maybe zinc.
Not good for equity holders.
No. Yeah, when you already got way more debt in this capital structure than you would want to see, given the earnings capability at the moment, you don't want to lever it up even more. But I think that management will talk to that to hopefully alleviate concerns that they come raise. But you're 100% right. Absent a bloody big insurance payout soon, then they are come raise.
Wouldn't it? Interesting when they did that big raise last year. We're like, oh shit, that should keep them sorted for a while. It's amazing how quick that can get depleted when you're in this position. What would you do if you were running 29 metals with Capricorn Copper and Golden Grove in your portfolio? Knowing the current situation, what are the company's options?
The big thing to me to solve, like as a priority, is actually the balance sheet, because I think the balance sheet is just such a horrible overhang. Like, you've got diminished earnings capability of the company, and but you've also got debt repayments, and until that balance sheet is like solved for the fact that they're not going to be making money for a period of time now, it's just a really precarious thing. How can you solve the balance sheet issue? Well, two things: you can restructure it by raising a bunch of equity and get rid of the debt that way. Another thing you could do, you could sell Golden Grove, use the proceeds to pay down the debt, and whatever's left over, if there's enough left over, use that to basically fund restart, and then your pro forma 29 metals could just be a pure play Capricorn Copper project kind of company with a clean capital structure.
Yeah.
Because you would not be able to sell Capricorn Copper in terms of just selling it to get it out of the portfolio, so you're not exposed to it, because no one's going to want it unless, as you said before, they bought the debt. Someone bought the debt for cents on the dollar and took it out of the portfolio.
Yeah, well, EMR's the kind of the player there, right? They own 40% of this company, and I'm kind of a little bit casting my mind back to Orabanda days. So Orabanda was distressed. They had a major shareholder there in Hawke's Point. I think they only owned about 20% back then, and the debt at the time was with, I think it was Investec, it was called, and not that one. This is a different.
Not the one that Photius was in.
Yeah, but he happens to be involved in that company. Was at the time, but I think it was Investec, and so it was like Hawke's Point, where staring down the barrel of a potential. Well, crap, we've put a bunch of money into it. We own the equity, and now the lenders might sort of put this into administration, but we want to get our money back. And what did they do? I think they bought the debt off of Investec for 100 cents on the dollar, just so that they could. They ultimately recapped it, and then they ended up owning sort of sub 50% of the pro forma company. But it let them kind of continue the story. They didn't cop a zero from the asset going into an administration process. So I just wonder if 29 Metals would sort of explore creative ways to preserve the equity value of what they've got right now, involving kind of getting potentially buying the debt from the lenders. I don't know what their flexibility or capability is to actually put a lot more capital into this, like buying the debt and then all of the restart capital associated with it. But because there's a fund that it ultimately belongs to.
Yeah, I mean, that's the other thing to note. This was part of, I believe, EMR Capital's second fund. And this initial investment, when they picked up Golden Grove and stuff, was a lot of years ago. And these funds have a life in which they need to return capital, and they'd be getting to the end of that life. I'm not sure if they've got the appetite to do this whole process again and start from scratch. Yeah, so it'd be a lengthy process. And you pose a question asking like, what would 29 Metals do? And Trav, you kind of spoke to it in your answer there, but it's really being pressured by what the debtors, what the lenders want you to do. They will be putting equity under pressure to keep themselves safe.
The thing that would make lenders most comfortable right now is just keep this as capitalised as possible from a cash perspective. The lenders would be feeling a lot more comfortable the more cash is in this company.
I think this is the one time that we'll hear you two actually saying that an equity raise is the best option here, because they've been diluted that much already.
Yeah.
It's at the point of survival now.
Yeah, and I don't think a spin out is feasible at all. You get this standalone entity with, rehab costs far exceeding what the asset is, worth at that moment in time. And that is, something that I just don't think would pass the sniff test,
We both think that, like, on the right time horizon, Capricorn Copper will make plenty of money, but it's a timing thing, because what's the pathway look like to get there? Because you've got this debt obligation in the interim and a bunch of sort of unsolved funding to get there. Like, your pathway as an equity holder can be a grim one unless you have a solution for that. But if this thing became distressed and then it came out on a bloody debt-free basis, you'd place the bet that Capricorn Copper on a long enough time frame will make money again for someone.
Do you think it opens up the opportunity for another party, not EMR, to get involved and purchase the debt, to get leverage, to get exposure to it? Someone that might be interested in the copper thematic?
I don't know. It'd be tricky. There's also it's apparently not a very good look for banks to sell the debt if it's distressed as well. Apparently that's a naughty thing to do that doesn't reflect well on you. So I just think there are some barriers to getting funky like that. But there's a special situation, entities that do like to get excited when you've got distressed assets, but they look for bargains, Matty. They won't be paying 100 cents on the dollar for the debt.
Far from it.
Yeah, but of interest, here's the picture of what Capricorn Copper, the site, looked like during the first horrific flooding incidents, and it sounds like it looks pretty similar at the moment. It's and I'll bring up now a photo of what it probably should look like in 2 years' time. That there is a shitload of GetWet bladders just absolutely scouring the site.
Why did you let us talk about it, mate? You've got the solution there.
Mate, mate, that joint, it's gotten wet. It needs to get less wet, and that's what GetWet can do, mate. They can make the joint more wet. They can make it less wet. They can transfer the water from A to B, whatever you need. And mate, I'll tell you what, they are the only company in Australia to supply and install these systems.
You're dead right, Matty, and not just in WA, over east, Queensland,
everywhere, Australia-wide, mate. If you just want the water to fill up the water carts, they are the go-to. Here's a video of a 2 million litre water bladder that they've installed. Biggest in Australia, I've been told, but it doesn't stop there. Mate, you can daisy chain these pricks. You can chuck 2, 3, 4 of these bladders together. The sky's the limit. They service the whole country. Mate, if your mine site wants to get wet or get less wet, you call Matt Hall from GetWet.
Matty, you said 2 million litre bladder. Well,
yep.
Well, when we did an episode on this company about a year ago in relation to this whole catastrophe, there was a quote, and it was that there's 200 Olympic-sized swimming pools worth of water that needs dewatering. So that's basically...
mate, just get 600 GetWet bladders.
No, you only need 100. You need 80.
No. There's every Olympic-sized swimming pool has 2.5 million litres of water.
Yeah, right.
So it's pretty
so
similar.
you don't even need 600.
No.
Just get 100 of them.
Mate, a couple hundred. A couple hundred is all you need. Happy
There
days.
we go, mate. That solves the discharge issue. You just store it in there, just fucking fill the bloody GetWet bladder full of lime.
Yeah.
That'll bloody sort it all out while it's sitting in there and neutralise the acid.
Yep.
It's a no-brainer.
We're actually...
GetWet.
This is an ad, but
drinking
you
water
might have
in no
actually
time.
solved that problem.
Pretty sure I have. Once again, look at that picture. That picture there of GetWet bladders scoured everywhere. That is probably what the country's going to look like. Everyone's talking about power. We're not talking about water and the future of water in Australia. We need GetWet bladders to save the country.
200 bladders. I think you just need the land to lay them flat. If you got enough room for
Australia.
How many Olympic pools did you say?
that. 200.
200.
200 Olympic pools. Oh, yeah.
Easy.
Sorted.
Easy.
Mate, and while I'm on bloody Capricorn Copper, with this underground flooded in this highly acidic sulphide environment, they have better used, historically, DSI ground support down there because holy snap and duck shit, that galvanised coating on those bolts will be getting tested to the absolute limits. If there was ever a chance that a split set or a gooey bolt could survive being drowned in acidic water, it'd have to be a DSI bolt. The only bolt that would stand a chance.
29M would be saving themselves as well because they can use the zinc that they have mined from Golden Grove to support their industry, go and galvanise the bolts.
Circles. It's all good things.
Circular.
As of Happy Gilmore.
Flows.
Mate, if those bolts, they're likely completely rooted, and if Capricorn Copper ever gets going again, mate, the bolts of mesh will need replacing, so they better be getting replaced with a full suite of DSI products, the split sets, the MDXs, the GUIs, the cable bolts, every type of mesh known to man. DSI have the order ready for Capricorn in 2020, whatever it's going to be, when they're going to need it.
TBA.
TBA. DSI.
All right, let's talk about more copper.
You talk about it, JD.
Let's do
You're
it.
the man.
So we're going to talk about a couple of things here. We're going to talk about Zambian copper deals, treatment and refining charges, and Trav, I think, has a prediction. So let's start with these treatment and refining charges. I'm not sure.
This is your Sierra Rutile.
It could be.
Treatment and refining charges of copper. You've got your little niches at the moment, you two.
Well, I was about to say, I'm not sure if anyone else has any interest in this other than myself, but I am interested, so we're going to talk about it regardless. So
I reckon more people care about that than they care about Sierra Rutile.
Hey, did you see my retweet last night?
Thanks, mate. Appreciate the support. Yeah. I've got no likes.
We have heard rumours that treatment and refining charges at Chinese smelters or at a Chinese smelter have gone negative. Now, this is just astounding to think about a smelter paying a mining company for the privilege of turning that concentrate into refined metal. So that's just kind of wacky to think about.
It's like the oil price back in the day when it went negative.
Exactly what I was thinking about.
What does that basically say? That the smelters are that desperate to run with enough feed that they're actually willing to pay the miners or whoever has the con.
Exactly.
So you can compare it to, remember when interest rates were negative in Switzerland because, the world perceived they would pay money to safely store their cash.
Yeah, Japan as well for a long time, a few countries. Just wacky things in markets that, don't really make sense on paper. And to sort of put the cherry on top here, nobody's talking about this. I find that pretty absurd. There's no real big media, mainstream media companies speaking about it. So what's going on here? We spoke about it a couple of weeks ago and sort of scratched the surface and talked about how these charges have fallen off massively. And as a quick reminder, this is set between the big concentrate producers, a big copper miner, and the cartel of smelters in China. So there's roughly 15 or so of them. They don't like to be called a cartel, but that's essentially how they behave. And the prices get set, these so-called benchmark prices, when one of the smelters, in this case Jinchuan, most recently, I think in November of last year, did this deal with Antofagasta, and they benchmarked it over $80 a tonne. And that then guides what the rest of the smelters charge with the wherever they get their concentrate from. So we've spoken a lot about the trouble across mines across South America, Cobre Panama, around the world really. A lot of problems at copper mines in recent times, as well as increased smelter capacity coming online. So within 4 months from that benchmark being signed, the treatment charges had fallen 80%, which is just enormous. They'd fallen to the lowest level ever that a lot of these market data providers have recorded. So I'm sure you're then going to see traders come in and try and lock in these sorts of prices for the longer term, although it isn't exactly clear to me that a smelter would be eager to sign a contract at which they're not even going to break even. So stepping back and thinking why are we interested in this? What does this actually do to the copper price? The relationship between the copper metal price and the treatment charges, it theoretically is inverse. So when the treatment charges fall, the copper price on paper should rise. It's not always that simple in reality. Not every company, a lot of big mining companies that have their own smelters, they don't have to contract like this. There's various other things at play here. But
so when the treatment charges are down, they need more copper, which more.
It indicates
more
a
demand.
shortage of
Yeah.
copper concentrate supply. On paper, that's kind of how it works, and it over the last month kind of indicated that that was holding true with the copper price ticking up. So like I said, those big Chinese smelters have acted as a single unit, kind of like OPEC when they designate supply cuts. The whole unit sort of cuts supply and they each get a sort of quota to work off. But we have heard that some of these smelters have been breaking ranks lately and sort of looking after their own interests. And when you look at each of the smelters, it kind of makes sense. They've all got different cost bases and they've got different arrangements with copper concentrate suppliers, you know, and that sort of plays into the extent that they're exposed to the spot price of copper. So they want to look after themselves, and you know, the cartel wants them each to suffer to the same extent, but that's not how it is playing out at the moment, and it's biting into the bottom line to different degrees depending on what your energy charges are and all these sorts of things.
Isn't it funny that cartel is used in relation to commodities starting with CO? Trav like it.
Cocoa, yeah.
We'll let the
That's
money
at all-time
miners
highs.
work that one out. So
It's like 300 bloody, what's that? $300,000 a kilo, that.
unrelated to that, there is another thing hitting the bottom line of these companies, and that's sulfuric acid, as you just touched about before, Maddie. Plays into effect a bit different here. It's a byproduct of copper smelting as well as other base metal smelting. So these smelters produce sulfuric acid and then they sell it, and the price of sulfuric acid has been pretty weak in China. Now, some of the money miners might be thinking straight away, we spoke about acid prices being very high in the context of uranium in Kazakhstan, but this is different. It's not that easy to move around all the sulfuric acid. The market is bifurcated, if you like. So it's
hyper localized, right? Like you need to have
Yeah.
a local purpose for that acid.
Yeah, exactly.
You can't just
Yeah.
chuck a plane full of sulfuric acid when you need
As
what,
Benny
70,
Feingold said.
70 or 100 tonnes of acid per tonne of uranium.
Exactly. It doesn't work like that. So what we sort of heard isn't of widespread negative treatment and refining charges. This isn't, what every single smelter is doing now. It was a sort of single case in point. But it's just astounding to me to see, the pricing dynamic like this. And I'm just going to keep following it and see what happens with the copper price from here, because I think that's, going to have pretty big ramifications over the short to medium term.
So what would you say the first catalyst would be? Like it's a supply. It's not a price thing. It's a supply thing. Like even if the copper price goes up, they just need more copper. Irregardless of the price.
The treatment and refining charges are, purely derived off supply and demand. And there's, increased capacity of smelting with all the smelters coming online. And, that leads to increased demand. But at the same time, you've got a shortage of copper concentrate with all these mines being curtailed and whatnot.
Yeah,
The relationship-
So it's not a quick fix.
No,
like
it's coming from both ends. It's not just demand.
Yeah.
It's not just supply. It's
The relationship to copper price, like as a result of the TCs and RCs, isn't as kind of clear to me, because I sort of think of like the copper supply and demand as separate to capacity supply and demand. Like I think that can be correlated, because like something causing both of these weird dynamics is like lower mine supply, but the like what in a free market, what would happen is you just have a reduction in smelting capacity, like a couple of smelters shut down, and then you have TCRCs mean revert to an equilibrium price at some point. But there's just this weird kind of
because when you're looking at what the copper metal price does, it's not the demand of the smelters you care about. You're caring about the demand of copper and the supply of
users.
So it's the same supply you're talking about on the one side, but the demand case is slightly different. You're talking about the end use. So
Take me over to Africa, JD.
let's go to Africa.
Bloody good joint.
Let's go to Zambia. So this sort of deal takes place far away from the ASX, but there is an Aussie company involved, and that is EMR Capital. Just
geez,
spoke
I
about.
hope this is a good one for them.
Yeah, it's
I didn't
not.
even win on that. What was that other Zambian copper thing?
The one they sold into Cobalt.
Yeah.
Yeah, that
It's worth a fair bit of fucking coin.
Yeah, that was, and they are still roughly 30% shareholders in that one. So what's happened here is that EMR has agreed to sell its 80% stake in the Lumbambe copper project to JCHX Mining. The remaining 20%.
I was about to say, they sound Chinese.
They are Chinese. The remaining 20% is Zambian government's stake. This JCHX is a Chinese mining services and construction group. They're Shanghai listed in Aussie dollars, about a $6.5 billion market cap. They've got contracts and contracts to provide services at Kamoa-Kakula, Robert Friedland and Zhejiang Mining's big copper mine, as well as Konkola in Zambia, which is actually sitting very close to the Lumbambe project, which we're speaking about here. These guys, this Chinese group, actually also own copper mines as well. They've got 2 copper mines in the DRC, so they're building quite a presence in the region there. So the assets at stake here, Lumbambe has a resource of 86 million tonnes at almost 2%, 1.95% copper. It's pretty decent.
Bloody decent.
But
did you see the guy on maths?
Deece. I've been watching that.
Deece.
Well,
It's such a weird saying.
Here's something that is not so decent. They have reported to sell it at a nominal price of $1, with the Chinese entity coming in and assuming almost $860 million in debt. So
Bloody hell.
from what I could work out, EMR bought the asset for US $97 million. And, if those figures are true and you're selling it for $1, it is a bit of a duster. So that hasn't exactly worked out in their favour. But there is a competing interest now, which is why the deal is become quite interesting. So International Holding Company, the most generically named company you can imagine, is the...
That's got to be a joke.
Yeah, it's the biggest holding company in Abu Dhabi, and in Aussie dollars capped at almost $400 billion.
Fuck me, right.
So it's enormous, and they are reportedly interested in being a part of this deal. And they recently hijacked another deal, and they bought the Mopane Copper Mines company for US 1.1 billion. There was sort of 600 or 700 million in equity, and then like a roughly $400 million shareholder loan being a part of that deal. But it just goes to show that they're not scared, and they want to get involved in these parts of the world in critical minerals. So it's very, very interesting that they're getting involved there. So the asset at stake here, Lumbambe, it only produced 15,000 tonnes of copper last year, but the ambitions are to scale it up. It's an underground mine, Matty, 2.4 million tonnes per annum plant at the moment. And I mean, if you're just running that at nameplate and the resource grade, you're talking at least 45,000 tonnes of copper. And I'm sure
the reserve grade, yep.
Yeah, and that 45,000 tonnes of copper, but there's been talks of scaling this thing up already, so I'm sure that's just a sort of starting point. But I think that the broader trend is what's really, really interesting to me. You've always had these Chinese groups very interested in Africa, in particular in the last 10 years. And now it finally, the West isn't the one providing any competition, more talking about providing competition, but we haven't really seen any Western countries get too heavily involved. But these Arabic oil-rich countries are really starting to show some interest in critical minerals, in particular in Africa. And I think it's just heating up. They're going to, in my opinion, have a lot of cash coming in the door from their fossil fuel sales over the coming years. And they're going to want to diversify that to set up their people for a long, long time. And, DRC has now overtaken Peru as the second biggest copper producer in the world. It shouldn't be flying under the radar anymore. It's not flying under the radar to these people. And I'm sure we're going to see more and more interest.
Oh, they'll be... Because they've got decades worth of work they could do with their cash reserves and the eventual transition away from fossil fuels if it ever fully happens. But
yeah, I mean...
far out, they've got a war chest to bloody deploy on it.
Yeah, and what they do own, the assets are just spitting off cash, so they can deploy that cash elsewhere and still run the assets that they do have in their home countries.
Wouldn't it make sense for them to go into uranium?
Don't they? I'm pretty sure they do.
The UAE gets over 25% of its power now
from uranium.
From uranium.
But investing.
They probably are.
Fucking load her up.
The International Holding Company might have some stakes. But
the International Holding Company. Anyone from the International Holding Company wants to come on for a yarn.
Well, I mean,
talk some smack.
This is Abu Dhabi's largest holding company. And you've also seen the Saudi Sovereign Wealth Fund really signal like their ambitions they're really interested in base and battery metals mining businesses. I don't think they've done like heaps yet, but like a lot of people are talking about, where like what they're keen to do.
They
and
did
what
the
sort
deal
of business
with Varley's base metals unit.
They did, yeah. Only a small minority interest in that, I think. But when we did the interview with Ben Cleary, and sort of his pitch was don't demerge the coal business, right? Like keep it all together. That was one of his 4 points. Well, here's a hypothetical for you. What if Glencore went ahead and did demerge their coal business? Then you've got coal on one side, then you got your marketing and your base metal sort of on the other side. Well, in that world, the current CEO and leader, Gary Nagle, he came from the coal business. Do you reckon he stays with the battery and base, or do you reckon he goes and joins the coal business?
He stays with the coal.
Goes to the coal business, probably. I mean, I'd rather be running the thing that makes cash. And then what happens to the base and battery metal business? Or maybe Saudi Sovereign Wealth Fund would have a part of that.
I think he did mention them as potentially a party that could be interested in the trading business as well.
Yeah. So anyway, I just throw it out there. If all that happens, then yeah, mate, it'd be pretty interesting. But I expect to see the Saudis take more and more of an aggressive position in relation to not just the mining assets, but also the marketing business, the commodity trading business that goes with it.
Yeah, I think there wouldn't be a shortage of suitors for that one.
Yeah,
Alrighty.
Trav, you're best mates at Strandline.
Oh, mate.
Mate, you can't say Mineral Sands doesn't get love on the show between the battle for Sierra Rutile and now Strandline.
Yeah.
What's going on here, mate?
Love my industrial minerals, mate.
Just because there's always bad shit happening?
Always bad. There's a lot of bad shit. The recent mineral sands producer, they've been stranded from the ASX board since October last year. They've been ramping up the Coburn Mineral Sands project, and it appeared they were having all sorts of problems there. And they went into a trading halt to try kind of recap and the company and come out with a better capitalised, more appropriate capital structure and a plan ahead and all that sort of stuff. But they've just been in suspension for ages now and still no visibility on when they're actually going to come out. Because I think that's been delayed a few times. So, like, the last half-year accounts show that they've got $208 million of debt in the capital structure there, and that's the big overhang of, like, well, crap, that's a lot of debt for a company that's losing money at the moment. The news today is actually in relation to their Tanzanian undeveloped mineral sands project. Way back in the day, Strandline was actually planning to develop that first, and then you had the Tanzanian government pull the rug on them, and as a result, they pivoted to Coburn first instead. Now the Tanzanian government has awarded their project over there a special mining license. So we've seen this with lots of other Tanzanian development projects in the last 6 months or so. If you read Strandline's announcement today, you might be left thinking, is Strandline trying to develop this project themselves? Because they say they're in discussions with potential strategic and offtake partners. But if you open their half-year account, released the other week, and you go to the going concern section, you'll see what the real play is. Strandline have a standstill agreement with their lender group. So this is like NAIF and Nordic bondholders. I think NAB's in there as well. And in this standstill agreement, they have to comply with specific objectives set by the lenders. Namely, they've got to pursue the sale of non-core assets. They've got to do an equity capital raise. They've got to deliver an operational plan. And they've got to give effect to the restructuring of the financing facilities with all financiers.
It's all about 4 points. Like same as bloody Tribeca's thing on Glencore. It's just like, do these 4 things.
Yeah, these are. Yeah, I think the lenders might have a bit more leverage than Cleary has over Glencore at the moment. But anyway, there it is. They're going to be selling the Tanzanian assets because it's literally point 1 there. Pursue the sale of non-core assets. It didn't stop there when I just didn't stop there when I was in the half-year accounts. I sort of had to look at a few other things while I was there. Coburn lost $122 million for the half year ended 31st of December. Now, $80 million of that was an impairment, but the rest is essentially like cash loss, you could think of it as. And the really interesting detail I stumbled across, gents, remember when they hired that mineral sands with Mr. Joseph Paterica last year? He came on board as Luke Graham was transitioning sort of to a different role and then eventually out. Well, when he came in the door, the salary he agreed to on the way in was $540K per annum plus some STIs and LTIs. And look what I noticed in the half-year report there. it says, commencing the 1st of February 2024, so that's last month, Mr. Padarika's remuneration was amended, receiving retention payments of $65,000 per month for a duration of 6 months.
And that's on top of the 540k salary?
Yes.
Jesus.
Decent retention payment, that one.
Fucking, I'm officially looking for a job.
But yeah, get me in a distress mineral sands company.
Hey, we'll split it between the three of us.
Oh, mate. So he's essentially getting 110k per month now. Pretty big.
The outcome might be the same for Strandline.
And it's a big incentive to hang around, right? Like, I mean, I kind of, I've sort of been around the bushes with a company in distress like this before, and there are all these sort of incentives that are kind of thrown around to keep the key personnel around, because it's just an absolute basket case, even more so for the lenders if key personnel disappear. But bloody hell, mate, that's I thought you'd tie the incentive to the whatever the outcome is rather than just hanging around. But anyway, let's see where it goes. My recommendation to a Strandline holder is who might be clinging on to some hope is just mentally in their head, just put a line through the equity. Just put a 0 on it. Like you'll feel better later. Just fucking rule it out. Move on.
I think that's the sad truth of that one.
Yeah, right. Firefly, well funded the other day, raising cash today. You got to read the full sentences, everyone. They said fully funded for phase 1.
For phase 1.
For phase 1. Mine, that was, and I guess when they first purchased this Green Bay copper project, we did a bit of the meters calc and figured the cash they had would only be enough or just enough for phase 1 because they were putting in the exploration drives. So jumbos aren't cheap, but they're raising bloody 52 bucks.
It's a big number, mate.
Yeah, fucking as you said, you don't realise bloody $250 million cap company. Seem to be bigger.
You know what else I've noticed lately is this trend to have 5 brokers on the syndicate raising the money. They had 2 lead managers and then 3 co-managers.
It's insane. 5 of them.
But you see it all. Where did we see it the other day? I felt like we saw it recently too.
We saw one. There was another one. They weren't brokers, but there was 6 names. So that was Lake. That was different.
Yeah.
But no, you're dead right. It's something more and more. 5 is huge. They're raising at a 10% discount, like you said, Matty.
Unless they're not confident of getting the full amount of kit for it, so they're like, we need a shitload of brokers to drum up bloody $52 million. It's split between there's the Canadian, what do they call
Montreal.
it? A charity raise, where they raise at a premium because
the flow through finance.
Yeah, because of the exploration discount. Then there's the insto placement as well.
Yeah,
so.
There's 2 reads when you have heaps of brokers. One is like, oh, geez, did you need heaps of brokers to get it? The other one is like, oh, we want to spread the love amongst everyone and make sure we look after all of the houses.
Good. Just keeping the bloody sell side alive. Good on you, Firefly.
I think this one's much more of the ladder in that case,
So what they'll have pro forma $69 worth of cash. So because they had that port agreement the other day, with I think it's 6Ks from.
Much closer than the previous option, yeah.
Yeah, so it looks like they're taking an 8.4% interest in that company. Couldn't really definitively say, but I think the company has the processing plant and owns the port as well, because they have to go through their tenement to get to the port. So pretty sure they own the port. Couldn't see it definitively. So yeah, whether this is another processing option for them, 6Ks away. Got the port, but hey, they're drilling out, dressing it up. They wouldn't want to mine it. They're dressing it up to sell it.
Sometimes
you on Matty, but
sometimes you can be a victim of your own success, mate. Like Bellevue had to develop Bellevue because that was too fully valued the whole time.
Yeah, I know, but I guess Bellevue's a friggin' stonking ore body. This one's, you know, it looks good copper grades, but it's over a kilometre deep and decline that's too small, and there's a lot of work to go into this project to get it mining at a pretty good rate to Australianise it, you'd say. So anyway, a lot of capital to go into it. But hey, if it's bloody copper prices US $15,000 a tonne, but on the back of all your macroeconomic predictions and analysis, JD, who knows what is possible in the world of copper mining.
It wouldn't be the fundamentals, it'd be money of mine.
It's bloody, mate, you are the mover and shaker.
I'm not so sure about that.
Right, Nova Minerals.
Let's stay in North America, Batty. Good old.
This isn't the no. Is this the? There was Novo in Australia.
Correct. Which
This
is
is
a TCRC.
That's up near Grey.
Yeah, that's Novo. This is Nova.
Nova
Yeah.
Minerals. Yeah, they got the Estelle project up there. Anyway, they had a strategic review outcomes released today. It's heap leaching kind of asset here, obviously, because it's 0.3 grams per tonne for 99% of their resource there. It's pretty tricky to make economic otherwise. But anyway, there's a whole bunch of detail in the strategic review released today. But I just thought it would be a great excuse to pull out a few fun facts about this company, because I can't really talk too much about the technical outcomes of a strategic review. Here's my fun facts about this company. Number one, they did some strange stuff corporately. In 2021, they did a share buyback. Imagine that, no revenue, but we're undervalued. We'll buy back our shares. And 3 months after the buyback, they raised money, capital raising, at a share price lower than they were buying back stock. So what a bargain for those shareholders who had the privilege of buying it, even lower than the buyback.
Don't you love it when you're a shareholder and your pre-revenue mining company goes and buys back stock?
Talk about good bang for buck on that
Oh.
equity raise. The money per share. Oh,
Yeah. Yes.
flying out the door.
That is what do you call it? The Tony Sage playbook. So the other fun fact is that this gold developer invested in a privately owned Rotor X aircraft manufacturing. Yep, Nova owns 9.9% of this private company that specialises in drone chopper / 2-seat helicopters. And they kind of justified it to shareholders as, it's like this technology has prospective mining applications and they're keen to save costs in the future.
That's pretty cool. You can't rip them for that.
I don't know. If I rip into a tin company for investing in a gold company, but at least they're both fucking mining companies.
Yeah. Mining company come venture capital business.
Yeah. Anyway.
So, end of the week, who have we got coming on, JD?
We are going to be chatting with Will Thompson. He runs Massive Capital. They're they describe themselves as a hard asset investor. So energy, materials, everything we speak about, as well as certain infrastructure assets are what get them excited. And
Have they been on the Centaurus journey, have they?
They sure have. They wrote a bit of a paper about it, I think a couple of years ago now, and it's been mentioned in fund newsletters not too long ago. So, not been such a winning trade of recent times, but before that, I'm not certain when they came in.
Still holding?
I believe so, but we'll find out on Thursday.
Yeah, so because Centaurus, they just recently, the strategy has changed for their Jaguar project in Brazil. So initially, when their 2021 scope and study come out, which I like the price deck. It was back then it was $16,500 a tonne nickel at 75 cents exchange rate. Today it's 16,720 and the Aussie dollar is 65. So their scoping study price deck was actually much lower than what it is today. So it's that's a tick. So for this project they had pre-production capex of US 288. All-in costs were $4.43 US a pound. Nickel price today is sitting at $7.50 in what we call a distressed environment. And yeah, it was like you look at it, post-tax MPV 831, so MPV to pre-production capital a bit over 3x. So this was going to produce around 20,000 tonne of nickel in sulphate because it was a vertically integrated model. So for context, BHP's Leinster operation, that produced around 25,000 tonne of nickel in concentrate for calendar year 23. So that's the sort of scale it's sitting at. And this was for a 2.7 million tonne operation. They were going to produce a concentrate. Then they were going to have a hydromet circuit on the back to then produce a nickel sulphate and a mixed sulphide precipitate. So that was like the zinc, the cobalt, the copper and the nickel. And they'd get payability on the zinc and the cobalt in that. But at the start of this month, they just come out and said they're updating their DFS, which is due in June. I think everyone's been waiting on that for a while.
Yes,
Oh, yeah,
I think that's
time.
about the fifth delay.
They pushed it back a lot.
Yeah, so
A lot.
but it's going to actually be focusing on a concentrate project only instead of, so they're scrapping / deferring the sulphate and the MSP side of things because I guess the landscape and the demand for sulphate is a lot different than it was 2 years ago. It's like, so there's a lot of more demand for the briquettes and the powder now, whereas sulphate isn't as in demand. Yeah, fun fact to learn about sulphate. I don't know the exact percentages, but when you get rid of it, when you ship away sulphate, it's like 70% water. So even after you refine it all, it's a bit smaller volume than if you were shipping away the concentrate, but most of it's just there's the nickel, the sulphate, and then the rest of it's water.
Wow.
There you go.
Fun facts with Matt.
So it also reduces the complexity of what they're trying to execute.
Yeah, exactly. And we've seen how successful the BHP nickel sulphate plant in Australia has been.
Sarcasm.
Not.
Just do the mining.
So because this, and the thing about Brazil is like with the hydropower and the solar, like it's supplied off the grid with like 100% renewables. So this, again, hinging on this green premium ever being attributed to metal prices, but so the project's been in the mix for a while. It's it's an interesting. I know Rick Rule was talking about it as one of the ones he liked in the downtime. So because remember Vale had the offtake rights for it initially. That was the bit of an overhang. So Vale had Centaurus by the balls a bit,
And then
but
they
then
bought it back.
yeah, so they bought it back and lifted the royalty for the concentrate went up 1.25% payable to Vale. So they've actually got 100% of the marketing and offtake rights themselves now that are on the market. So
And the market very much liked that when they executed that. It was received pretty well.
always a good test to look at a company that whether the price deck would be a reflection on and what they'd actually produce, but if they could survive in shit times like this. So
Yeah,
I'd be
I hope they
interested
get
to
through.
be looking forward to talking to old mate about Centaurus to see what he thinks going forward.
Yeah.
So,
Yeah. It's all, and the thing that I've
it
just
sounds like I'm a fucking shareholder. I'm not.
No.
But I found it
Mate, you're just a
interesting.
contrarian.
It's a
and this
contrarian
is
bet. I mean, like, a lot of people sort of like think it's a really attractive ore body. Nickel prices are belted. I think there was another overhang in relation to the Met stuff, and the red flag to me is just like the amount of times they push back the DFS. That just doesn't pass the pub test. Don't know what's going on there.
Yeah, they're obviously going to sacrifice a lot of payability going down this route to sell in a concentrate only, but shitloads friggin' simpler. So these are 2021
see
capex
simpler.
prices. So US 288 might be still US 288 just for concentrator only in this environment. Who knows? But
expect that to jump up.
yeah, well, it might. As I said, if they drop the sulphate component off, might be the same. So
They got an iron ore asset as well, which
I think that come out. I think they're looking at options of either. They're talking about I didn't read too much into it, all this pellet stuff, but I'd say they'd be looking to. They mentioned they were looking at options to
Monetize it.
Sell the fucking thing.
Good stuff, fellas.
I love your
couple
work.
odd companies there.
JD, I'll see because your sponsorship rips have just absolutely. They've inverse relationship to the copper treatment charges.
Love to hear that, mate.
Just riz it.
It's like I'm in school with the master here. So
they follow the same trajectory as a Brooks Learjet, mate. Just start puffing away.
on that note, VRIFY. Give Grant at VRIFY with no E a email. Also got GetWet Solutions at the top of the show.
Saving Capricorn Copper.
DSI.
Cool.
Absolutely. DSI Underground also going to be saving Capricorn Copper.
Plus, the world.
Cannot thank SMEC Power and Technology enough, as well as Anytime Exploration Services, KCA Site Services, Brooks Airways, and
K-Drill.
Hoodoo Money
Should
Miners.
we charge K-Drill extra for getting always that K-Drill at the end?
Always in the same tone as well. People remember
Yeah,
that.
I know.
It's
You
good.
can never forget that one. Hoodoo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.